the Fed's interest rate decision on Wednesday, yet also ECB's and BOJ's interest rate decisions on Thursday and Friday respectively are expected to gather substantial interest among traders. But it's expected to be an exciting week, also due to the release of a number of high-impact financial data. On Monday, we make an early start with New Zealand's trade data for June and continue with the preliminary PMI figures of July for Australia, Japan, France, Germany, the Eurozone as a whole, the UK and the US. On Tuesday, we note the release of Germany's IFO indicators for July, UK CPI trends for industrial orders, and the US consumer confidence for July. On Wednesday, we get Australia's CPI rates for Q2, and on Thursday, we get Germany's forward-looking GfK consumer sentiment for August, UK CPI distributive trades for July, and from the US, we highlight the release of the preliminary GDP advance rate for Q2 and note the release of June's durable goods orders as well as the weekly initial jobless claims figure. On Friday, we make a start with Japan's Tokyo CPI rates for July, Australia's final retail sales for June, France's preliminary GDP rate for Q2, France's and Germany's preliminary HICP rates for July, Switzerland's COF indicator for July, Canada's GDP rate for May, and from the US, we note the release of June's consumption rate and core PCE price index, as well as the final University of Michigan consumer sentiment for July. The USD seems to be able to hold its downward trajectory over the past 2 weeks against its counterparts, maybe even edge a bit higher in the past few days. On a macroeconomic level, there seems to be a stalling in both the production and the demand side of the US economy. In the coming week, we have a number of high-impact financial releases from the US, and we highlight the preliminary GDP rate for Q2. Yet, we expect market attention to be placed mainly on the monetary front, as the Fed is to release its interest rate decision. The bank is expected to deliver 25 basis points rate hike, and the market is expecting the bank to remain on hold after that until the end of the year. Hence, should the bank actually deliver the 25 basis points rate hike as expected, and maintain a rather hawkish tone in its accompanying statement foreshadowing more rate hikes to come, we may see the US dollar getting asymmetric support as the market may have to reposition its expectations. On the flip side, should the bank sound uncertain or allow for the notion that it has reached its terminal rate, then the market's expectations are to be justified and we may see the US dollar losing some ground. The pound seems about to end the week low against the US dollar, the euro and the JPY in a broader sign of weakness. The weakening of the pound is understandable on a macroeconomic level after the slowdown of UK CPI rates for June. The easing of inflationary pressures was characteristic as the rates slowed down in June more than expected, both on a headline as well as on a core level. Nevertheless, the rates are still at very high levels considering BOE's target of 2%. Hence, BOE still has to maintain an aggressive rate hiking stance, yet the slowdown of the CPI rates tends to ease the pressure on BOE. The market's expectations for the terminal interest rate seem to have been lowered and are now expected to reach 6% by the end of the year. Overall, though, we tend to maintain our expectations for the bank to continue being aggressively hawkish. On the other hand, though, BOE's monetary policy tightening tends to slow economic growth in the UK. Hence, we tend to highlight the release of the preliminary PMI figures of July, with special emphasis on the services sector indicator, but we also expect the CPI indicators to gather attention by pound traders. JPY seems about to end the week low against the US dollar and the euro, but seems to remain steady against the pound. On a macroeconomic level, we note the improvement of the trading balance, turning marginally positive in June for the first time in the past 2 years. The release could be perceived as another positive sign of Japan's economic recovery. On the other hand, the easing of inflationary pressures in June seems to be stalling, yet BOJ seems to be determined to maintain its ultra-loose monetary settings in place. Hence, the bank's meeting in the coming week is coming under the market's magnifying glass. Interest rates are expected to remain unchanged at minus 0.10%, and given the recent statements of BOJ Governor Whether, we expect the bank to maintain its dovish stance in the accompanying statement. Should the bank actually remain dovish as expected, we may see JPY weakening as monetary outlook differentials with other central banks would be expected to widen. On a more fundamental level, we highlight JPY's dual nature as a safe haven and a national currency. Hence, Should the market sentiment turn more risk-oriented, that may provide some outflows for JPY and vice versa. The common currency is losing ground against the US dollar in the past week, while it tended to gain extensively against the pound and to a lesser degree against the JPY. We note on Monday the release of July's preliminary PMIs, with the market focus expected to be placed on Germany's manufacturing sector. The highlight of the week for Euro traders is expected to be ECB's interest rate decision on Thursday, though. The bank is expected to hike rates by 25 basis points, and currently Euro OIS implies probability of 97, almost 98% for such a scenario to materialize. The market currently seems to be expecting the bank to hike rates again in September. Hence, should the bank actually deliver the rate hike as expected, the next points of attention are to be the accompanying statement and ECB President Christine Lagarde's press conference. Should the bank maintain its hawkish tone, we may see the common currency getting some support, while should the bank signal that its terminal rate has been reached or is nearing, we may see the euro retreating. Yet Euro traders' interest is to be maintained, as on Friday we note the release of France's and Germany's preliminary HICP rates for July and France's preliminary GDP rate for Q2. Should the HICP rates stall to slow down, we may see the euro getting some support. AUD is about to end the week lower against the US dollar, yet recent data tended to limit the Aussies' losses. On a macroeconomic level, we note that Australia's employment data for June beat expectations, with unemployment rate ticking down, while the employment change figure dropped less than expected. The better than expected data may sharpen RBA's hawkishness somewhat. We note that the release of RBA's minutes for the July meeting tended to imply that more rate hikes may be required for inflationary pressures to be satisfactorily curbed. On the side, we would also note that RBA Governor Lowe is to step down and is to be replaced by RBA Deputy Governor Michelle Bullock, starting from mid-September. In the coming week, we would highlight the release of the CPI rates for Q2. On a more fundamental level, we note that the measures taken by the People's Bank of China to support the yuan tended also to provide some support for the Aussie. Let's not forget that at the start of the week, the release of China's GDP rates and other data tended to create some worries for the recovery of China and thus weakened the Aussie. The CAD is about to end the week in the greens against the US dollar for the second week in a row. It should be noted that even the considerable slowdown of Canada's CPI rates for June was not able to halt CAD's winning streak. It's characteristic that the headline rate slowed down and entered BOC's 2 to 3% target range, with the core rate still remaining just barely out of range. The release tended to enhance market expectations for the bank to remain on hold in its September meeting, yet another rate hike in the coming months is still possible. So there is still some uncertainty being maintained for the bank's intentions. In the coming week, we note the release of Canada's business barometer for July on Thursday and the GDP rate for May due out on Friday. Especially a possible acceleration of the GDP rate could provide additional support for the loonie. On a more fundamental level, we note that oil prices edged higher for a fourth week in a row. Should oil prices continue to be on the rise, we may see the loonie getting some support, given that Canada is a major oil-producing economy. As a general comment, we expect volatility to rise in the coming week, as the number of high-impact financial data is to increase, as are also the number of monetary policy events mentioned before. The US dollar may increase its dominance in the FX market mainly, yet certain releases may allow other currencies to navigate more independently. Yet the initiative over the moves in the FX market is to remain in USD's hands, with the release of the US GDP rate for Q1 and the Fed's interest rate decision weighing considerably. Yet the Fed's interest rate decision is to have wider ripple effects, as it can affect also US stock markets as well as gold's price. It should be noted that US stock markets maintained the upward motion over the past week. The earnings season is in full mode, with corporations such as large banks like Wells Fargo, JP Morgan, Citigroup, Bank of America, Morgan Stanley, and Goldman Sachs surpassing market expectations, assuring overall some resilience considering the tight financial environment in the US. Other companies such as Tesla and Netflix tended to make a sensation with the market with their releases, and they tended to weigh on the share price. In the coming week, we expect a shift of the market attention towards the tech sector, as we expect the earnings releases of Microsoft, eBay, Meta Platforms, Alphabet, Intel Corporation, and Amazon, among others. As for gold's price, we note that the precious metal seems to have taken advantage of USD's weakness as it was on the rise. We expect the negative correlation of the USD with gold's price to be maintained in the coming week, with US yields also playing a substantial role given that US bonds tend to be a competing trading instrument to gold. Should the US dollar gain, gold's price may drop and vice versa. We hope that you found this report useful, and from all of us here at